So today is Friday, and last week we talked about working with investors, how to find investors right on your backyard, and how to tap into this niche in the real estate industry, and how that's also the low hanging fruit, and how many deals you can get from these people. But what's important is to be able to build relationships, right? To know exactly what to do, who to talk to, how to approach these people, the type of information and knowledge and resources that you need to have. And going back to relationships, one of the best relationships you can have is that relationship with your lender, right? With your loan originator. And that's why we invited today Julio Noy with City First Mortgage Services. And Julio is going to be talking a little bit about the different programs that they have available, especially for this type of individual, and how we can show these people the type of loans that they can take advantage of to be able to do more business, and not just for them, but you also have other buyers that are in look of different loan products, and Julio can help with this. So Julio, the floor is yours. Take it from here.
Thank you, Dylan. Thank you, Steve. I appreciate it. Hello to everyone in the Broker Nation team. I appreciate the time, and I do value your attention. I'm going to go ahead and share my screen. That's okay, right, Steve? I can go ahead and share the screen. All right, let's go ahead and get that going.
Yeah, go ahead.
Let me know when. Let me know when you guys can see it.
Okay, we see it. City First,
Perfect.
blue and green.
Perfect. So I'll just take a moment, and I think one of the most important things I want to start with is I want to take a second and give me 1 second here. Hold on. So I've met a lot of you in the past. I did a presentation for you several months ago, kind of just covering a lot of specific topics, but I do want to take a moment at least to introduce myself one more time for those of you that are new to the Broker Nature team, or haven't had the pleasure of speaking with personally. So my name is Julio Noy. I'm a senior loan officer for City First Mortgage. Born and raised, South Florida native. I started in this business back in 2006 as VP of residential lending for First Financial Mortgage of South Florida. In between, I had over 15 years of communication experience. I'm married, 25 years, 2 kids, one of which is actually leaving to FSU starting next week. So it's kind of an exciting time for my family.
Congrats.
Oh, yeah, thank you. So when I think of my interactions in my business, and I participate in Delan's Mindset Mondays, which is incredible information. One of the things that I always kind of keep on the top of my mind are two key features of how I manage my relationships with either personal or private individuals. Right, it's all about accessibility and accountability. Right, being accessible, I think, is critical. And being accountable based on what your promises are and what you can deliver, I think, are equally as important. So both those factors are something that I use to differentiate myself from anyone around me, right? And ultimately, you can't forget that I work for both of you. I work for not only you but your clients. So it's important to kind of keep in mind that accountability kind of is spread across the relationships and my interactions with both you and your clients. So that's just the way I build my business since the very beginning. What I'm going to be covering today is a brief overview on 2 most important non-QM programs. So for those of you who don't know, QM stands for Qualified Mortgage. So what's a qualified mortgage? It's anything that kind of falls down the Fannie Mae, Freddie Mac conforming guidelines, right? So everything FHA, VA, all falls under QM. Anything outside that box falls under non-QM, right? Which is the more creative types of financing depending on the specific situation. And there's 2 specifically that I want to cover because I was having a conversation with Delan and we came across, the realization that there's a lot of these opportunities that kind of hit our desks. And sometimes we don't know what to do with them. Sometimes we don't know how to ask the right questions or how to really understand what's available for these type of borrowers, right? So the first one that I wanted to go over with you is the bank statement program. Now, this program is fantastic. It's just been growing by leaps and bounds. It's specifically geared for self-employed borrowers. So what happens? you'd be surprised on a daily basis, and I'm sure all of you get the same thing, where you get a call from a buyer and they're self-employed, right? So when they hit my desk, one of the first things I ask is to try to better understand how their income is put together, right? So what happens? Most self-employed borrowers run a lot of their expenses through their corporation, right? So when you actually pull their 2 years of tax returns and you start looking and seeing what their qualifying income is, although they've made a considerable amount of money in their business, their qualifying income is very small, right? And more often than not, they feel like they're kind of unable to secure a mortgage for a specific purchase because they can't prove income, right? And one of the key factors of a conforming QM product is to be able to not only show assets, but show your income, right? The ability to repay the loan. So there's programs that are put together that are specifically geared, and this one specifically towards self-employed borrowers. So it's kind of a different approach. We can look at either 12-month or 24-month bank statements. So when we look at their bank statements, what we're looking for are the total deposits into those accounts. So we would actually look for 12 consecutive months, and we would actually go through and add up the deposits that are going into their either personal or business bank statements. We add that number up, and we can use that number divided by 12, obviously, and I'll show you an example of how we get to that calculation. And we use that number as their qualifying income. So in this particular case, for self-employed borrowers, it could be either owner-occupied, second home, or non-owner occupied. This program has a slightly better rate than the next program we're going to talk about in a moment, but this is something that I think is where we start off, right? So a couple of pieces of information that we were gathered from the customer. We don't need tax returns. We don't need any type of proof of income, right? We usually get a tax preparer or CPA letter stating that the business is operational. And we can use, like I said a moment ago, either personal or business bank statements.
Julio, let me ask you, I'm sorry to interrupt. Quick question. Are all deposits eligible when it comes to the bank statements?
That's a great question, Leland. No, not all deposits are eligible. And let me tell you which deposits are not eligible. So as we go through these bank statements and we see deposits coming into their account, anything like transfers from another account belonging to the applicant, that's obviously not considered an income because you're moving money from one account to the other. That will not count towards the calculation. Any assistance from the government, let's say if it's a business bank statement and they received PPP income, right? The payroll protection deposit from the government, that doesn't count obviously because that's not income in the eyes of the lender. Any type of assistance from the SBAs, again, these are things that are not counted in the calculation. But any other income listed on that deposit can be, right? So if it says Zelle transfer, no problem, we can count that. Deposit from income management software, we can count that. Anything apart from loans, government disbursements, and transfers, those are not counted. So thank you for that question, Dalen. That's very important to keep in mind as you're kind of going through that calculation. And again, I will do this calculation for you, but it's important that when you're having that preliminary conversation with your clients, you're saying, hey, look, we have this great program and our loan officer is going to go through it with you in detail, but keep in mind they're going to add up your deposits, but not use some of those deposits that some individuals might have gotten.
Perfect.
The next two bullet points are going to highlight the difference in calculation based on personal versus business. So a lot of clients, as a matter of fact, I started one yesterday where the borrower he was an independent contractor, so he did not have a corporation set up. He put everything through his Schedule C on his tax returns. So we would use his personal bank statements. I went through them, and we could use either 12 or 24 months. So you might ask, why wouldn't we use 24 versus 12? Well, there's a rate advantage, there's a rate adjustment. If we can prove 24 months, basically what happens is you're going to get a slightly better interest rate, maybe by an eighth. But again, the idea is to add up the deposits over the course of that year, and then divide that by either 12 or 24, depending on how many months you're using. And in the example, we look at 24-month example, $200,000 deposits divided by 24, that equals 8333. That's the number that the lender is going to use in order to identify what their qualifying income is. Again, no tax returns, no pay stubs or pay information. It's basically that cut and dry, right? Obviously, we're going to verify additional qualifying factors. For example, they have to have certain credit score, right? You can't be extremely low because then it's just kind of it'll kill the deal. And they're also going to verify the assets. The assets are important because that's what's going to be used for your down payment, your closing costs. You got to make sure the reserves are in place depending on the deal. So credit and assets are always verified, but this particular program, the income is not. And it can be, like I said, either self-employed income or 1099 income will qualify. Another key number to keep in mind, guys, it's up to 90% loan to value. What does that mean? That means the loan that the lender is going to provide in comparison to the value of the property. So 90% loan to value directly translates into a 10% down payment, right? I think most of you know that. So this particular program goes up to 90%, right? And it also has credit score starting as low as 640. Now, as the credit gets better and the down payment gets larger, there's adjustments to the rate. It always gets a little bit better. Sometimes in 1/8 increments, sometimes even a quarter increments as soon as you get over the 700 credit score. This program specifically has loans up to $3 million. So again, keep these, without going into an incredible amount of detail in addition to what I just described, keep these things in mind because I am positive that a lot of you, through your networking efforts and your prospecting efforts, you come across borrowers that are self-employed. Again, it happens to me on a daily basis. And I think that having access to a program like this puts you in an advantage compared to everyone else that might not be aware of this particular solution for customers that can't prove through their self-employment a large amount of qualifying income. Okay, so keep that in mind. This is the bank statement program. The next one that I'd like to cover it's called the DSCR cash flow program. DSCR stands for debt service coverage ratio, and I'll explain in a moment what that means. This program is specific for investors. It's only for non-occupied properties. So again, keeping another tool in your bag, right? You come across a borrower or client that says, hey, I'm an investor. I'm looking to purchase anything from a single family condo, multi-unit, and it's strictly to get it rented out. I need a program that would allow me to come into a solution like that and really kind of increase my portfolio and strengthen my portfolio. So let me tell you a little bit about how this program works. This is basically built on the cash flow of the subject property. A lot of these investors will come in and try to look for hard money loans. Hard money loans are a tool in the situation where you need it, right? The rates, as you know, is going to be higher. The costs associated with those loans are higher. They're always short term. So it's a tool that's there that exists if you need it. But if you can avoid a hard money solution and go into a debt service or a cash flow program like the one I'm describing, again, it's going to put the borrower in an advantage to be able to leverage additional properties down the line. So how does the cash flow property program work? When the borrower completes the application, one of the very first things we do is we run an appraisal on the property. That appraisal is going to have a 1007 into it, right? That 1007 is basically going to describe what the rental potential is based on the comps that the appraiser performs. And that's going to give you a number. So that number is key to determine whether this program works for the borrower or not. So I'm going to give you a very general high-level example, right? So let's say that you have a borrower looking to purchase a single-family residence for as an investment, right? So the appraisal is done on the property, and that 1007 says that that property can rent for $2,000 a month. Okay, so keep that number in mind, $2,000, right? So then we would back into the deal and kind of look at the rates of terms available based on the credit score and assets, right? So we would do the calculation and we would identify what the principal and interest payments are. We would identify what the taxes and insurance are and HOA applicable. When we add that number up based on the interest rate and loan to value and just how the deal is built, it's going to give you a monthly obligation. So that's your debt service on the property. So going back to my original example, if that appraiser said that that property rents for $2,000 and your total debt service for that program, in other words, principal, interest, taxes, insurance, and HOA are below the $2,000 mark, then the deal automatically works, considering that we can verify assets and credit score. Another fantastic program because this doesn't limit the number of total properties that that investor can invest in. So again, keep that in mind, right? You look at a property and you can apply the same calculation to a condo, to a multi-unit, a duplex. Actually, I'm doing several duplexes now for my clients that are taking advantage of this program. Again, we pull the 1007, see what the rent goes for that property. I see what the debt service is on the loan. And as long as the rental estimate on the property is higher, equal to or higher than the debt service on the loan, the deal works financially. No additional verification of income, no employment. As a matter of fact, on the application, on the 1003, so the mortgage application, the IRLA is considered a 1003. That form, we don't even list an employer. So no employment and no income, right? This is a fantastic program for investors that want to get into a property, make sure that property cash flows, build their portfolio, and take advantage of any positive cash flow on a monthly basis, plus the appreciation of the property, right? A couple of things to keep in mind. This is again, not to get overly technical, but this is important as well, right? If the borrower has a 700 score or greater, and the loan to value is 75% or less, okay, so they're coming with at least 25% down, and their credit score is over 700, they'll waive that 100% debt service calculation. So what does that mean? Go back to my original example. That property that I described a moment ago, the appraiser says that it yields $2,000 a month in rental income. Okay, now you run the numbers on the deal, and let's say now the principal, interest, taxes, insurance, and HOA are $2,100. Okay, so now the expenses or the debt service on that property exceeds what the appraiser says you can get for that property. If the down payment is 25% or greater and their credit score is 700 and greater, it doesn't matter, they'll still do the deal. So that is very, very strong. You might ask, why would they do that deal? Well, it's important to understand that 1007 inside the appraisal's report that says how much that property is going to be generating in rental income. That's their estimate. Apart from buying a new investment property, there are a lot of clients out there that buy these properties. They clean them up. They might put new carpeting or very basic flooring. They might paint it. They might do some light work to it, and they actually get more than what that appraiser said that the potential rent income is for that property. And lenders understand that. So again, you want to make sure that in any situation that debt service is covered with the rental potential of that business, of that unit, of that property. And if their 25% down is given or greater and 700 scores or higher, and it's not, if that deal's in a negative, again, the lender will still do the deal, which is phenomenal. It's fantastic. No limit on the number of properties this investor can have. We can close this in an LLC, which is important. We can do purchases, refis, or cash outs on an investment property. This program applies to all of it. And also single family condo multi-unit. The cap on the loans here are 1.5 million as opposed to 3 million on the bank statement program. So again, two specific programs built for two individuals that in both cases income is not the issue, right? So deposits in your bank statement for properties for self-employed borrowers, and then we have the cash flow program specific for investors. Both of them extremely aggressive programs. The process that I go through is relatively simple. I'll gather the information from the borrower. I'll keep you as a realtor involved and up to date as to every step that we're going through, so you understand where we are in the process. Again, going back to my initial description, accountability and accessibility is critical. So I keep you in the loop, right? No one's kept in the dark. I work in complete transparency. And as I go through the process, yes, go ahead.
Yeah, quick question. You already answered this, but that the borrower can close an LOC. But my question is, does the LOC needs to have X amount of time open, or can they open it while they're in the middle of the transaction to be able to close on the LOC?
So obviously they want to keep they want the deal to make sense, right? If we see that we open an LLC to run this transaction, that might be an issue. Bear with me for one moment. Let me reset my camera. 1 second. Hold on.
Yeah.
Come back. Can you hear me?
I can hear you.
I can hear you. Okay, 1 second. You can see me now, right?
Yes, sir.
Yes, sir. Perfect. 1 more second here. Hold on. All right, you can still see my screen as well, correct?
Yes.
Yes. Okay. So that's the basics on these two programs, and I want you guys to keep this in mind. Go and well, let me step back for a moment and finish answering your question, Dylan. Yeah, the deal has to make sense. If the lender sees that corporation was just open, they're going to ask some questions, right? They want to understand, what the intent here is. Typically, anything open more than a year, there's no questions asked. It's we can close them in an LLC all day long. It's not an issue whatsoever. But we will look at it on a case by case basis, and there's lenders that when we go through the process and we build a deal, we're doing the right things. The right things will happen. So it's not an issue whatsoever. If the client does not want to do it in an LLC, they can put in their personal name. That's fine as well. But again, we can kind of accommodate them, and we'll look at it on a case by case basis.
Perfect.
So, just kind of to recap, there's a lot of programs outside the conforming loan guidelines. And hopefully Daylan and I'll be sharing some of these other programs with them as the time goes on, and I'd love to share them with you guys as well. But these are two that I'm seeing way too often, and I think it's really important to understand that if you know that these programs exist and you have these conversations with your clients, you can educate them at least at a very high level that these programs exist. Put me in contact with them. I'll go through the entire presentation with them. I'll ask them the right questions and identify whether this is a solution for them or not, and if it makes financial sense or not, quite frankly. And once we identify what that is, I can start the information gathering process, run everything through our system, and do the calculations in order to give them a pre-approval. Now, pre-approvals are important, right? Because ultimately, I'm sure a lot of the seller's agents are going to want to see proof that these programs are there and this particular client qualifies for them. But more often than not, it's never had an issue up to this point. And once we present that, we can move through the process very quickly. Specifically, the debt service program, it goes through the paces very, very fast. The turnaround time is, I did one in as little as 3 weeks, start to finish, including the appraisal. So again, these are things that don't take up a lot of time because there's limited verification on the borrower's income on the back end. So it's a relatively simple process. Any questions? Steve, Daylan, anybody have any questions that you want to kind of go through with me prior to us wrapping this up?
Yeah, I see no questions in the chat so far. If you guys are free to unmute yourself and ask Julio any questions you may have, or he's sharing his information. It's in the screen. Feel free to reach out to him directly if questions come up later, or you have any investors that might need some help. Please feel free to reach out to Julio. These two programs are really, really good. I think they solve a lot of issues right now in the market, especially for self-employed people or people that they're looking to invest money into real estate and build a portfolio. So what a best way of doing it through a day service provider like them. So again, feel free to unmute yourself if you have any questions, or get Julio's information and call him. He has all the answers.
Elon.
Hey, Jane.
Hey, so I'd like to give a testimonial to working with Julio.
Yeah, please.
I had a serial entrepreneurial customer or client, and he actually had a buddy that had a mortgage company and couldn't get them done. And Julio, when you talk about accessibility and accountability, Julio was like 100%. I mean, he's incredible. We would have conversations, and not to advertise that you should call him at 10 o'clock at night, but we would have conversations at 10 o'clock at night, 9 o'clock in the morning. And more importantly, he would be calling me with information. So rather than an agent trying to chase down a lender, Julio is 100% accountable, and accessibility is par none. So I want to give kudos to Julio for doing a great job, and it's a pleasure to work with him.
Thank you, Jane. I appreciate it. It's a pleasure to work with you too. Absolutely.
All right, Julio, anything else you want to add?
No, I'm good, guys. I'm accessible to you. My cell number's on the screen. That's the best number to get a hold of me at. My office number is there as well. My office address. I'm here. I'm here for you. I'm here for you. I'll make this work, and really put you in a position where you can close your deals and increase your revenue potential. That's my job, and that's what I like to do. So, again, guys, give me a call if you have any clients that are looking at either of these two programs, or if you just want to talk about a conventional purchase. I'm here. I'm here to help you out in any case. Absolutely, 100%. Thank you, Dylan. Thank you, Steve.
And if you haven't seen in the chat, everyone can check out the chat. I wrote out Julio's contact information there too, so you can copy and paste it into an email or save it somewhere in your phone. And make sure you look him up for these two great programs. If you have self-employed or investor clients, you should definitely, sounds like, be talking to Julio, right?
Absolutely. All right, Julio, thank you so much for joining us today. Thank you so much for the information and again, making yourself available to talk to us and showing us the programs that you have available for. It doesn't matter what type of need, there's always a program out there. And the ones that you show, I love them. And I think moving forward, there's going to be a lot of people that are going to be going out there, and especially agents, that if you're going to start working with investors, you want to be able to show them some resources and availability as far as the money, where they can get money from to be able to acquire more properties. And one of those programs can help them, definitely help them a lot. So again, thank you so much, Julio. I appreciate it. And thank you everybody for joining us today on Real Estate Friday. Again, this is the training today was recorded. So if you want to go back and see it, if you want to see Julio's explanation on these two programs, feel free to reach out to Steve. Steve, what are we having? So they can reach out to either one of us.
Yeah, email. We got a small group here, and I think all of you know me. Most all these names I recognize, but reach out to me, Steve at brokernation.net. I'll put it in the chat, and I'll be happy to send you the recording for this, and you can look it over again and study this in your own time too.
Right. We also have it on YouTube, I believe. We also have it on Facebook, since this is being recorded right now. So you can, it doesn't matter what platform you use, it's available for you. So now it's your turn to do your due diligence, get familiar with this type of programs, and put it to good use. I mean, there's a lot of people out there that we can definitely help, and especially in our type of business. So with that said, thank you so much for joining us. I'll see you guys on Monday. So please register for our Mindset Monday training. There's other trainings coming up. And for that, you need to go to www.brokernation.events. You're going to see the list of events that we have coming up. Register. Even if you see whatever training you see there, just register for it, because that way we have the your email, so we can send you updates on the upcoming trainings that we have available. All right, everybody, have a great Friday. Enjoy your weekend, and I'll see you on Monday. Bye, everybody. Thank you, Julio.
Okay, bye. Thank you.
Bye. Have a great weekend.
Bye, everybody. Have a good weekend.
Bye. Thanks, everybody. Have a great weekend, and we'll see you on Monday for Mindset Monday.
Thanks,
Thanks,
fellas.
everyone.
Ciao.